Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey guys, welcome, good morning, good afternoon, welcome guys. It's almost 11 a.m. Eastern. It is Monday, May 20th. Thank you guys, everyone, for joining. I appreciate all of you guys. How is everybody doing today? Welcome guys, welcome everyone in Zoom. Thank you guys for joining, making sure everything is all good in Zoom here. All good. Dale, welcome, good morning. Thusme, welcome. Daniela, welcome. Patrick, good morning. Conrad, welcome. Aaron, good morning to you. Ramon, good morning. Mike, welcome. Trevor, Mario, welcome. Mark, V, nervous for Game 7. It's going to be exciting. It's at 9 p.m. tonight, so I'll be watching it. So big game. V, I hope the best team wins. As long as one Canadian team moves on and it's not Toronto Maple Leafs, I'm happy. Luciano, welcome. Kimi, welcome. Juanito, welcome. Lizzie, Mats, welcome, guys. Thank you guys for joining, and everyone on YouTube. I appreciate all of you guys as well. Thank you guys for joining. And Andy, welcome. Veditan, welcome. Thank you guys for joining. Naz, US30, welcome. Thank you for joining. One Official, welcome. Maybell, Jake, welcome. Golden Ways FX, welcome, guys. Thank you guys for all joining. What we're going to do today is we're going to go for the next couple hours, and then I got to take my kids. It's a day off of school for them. Canadian banks and schools are closed today, so I got to take them to the movies. We're going to go watch a movie this afternoon. So we'll see what happens in the markets in the next couple hours. We'll go over some news to get started for the week. We'll go over the entire week's news in Forex Factory earnings. We'll try to plan our week ahead. We'll be trading all week together. And then we'll go over gold and US30. If you guys are trading, I know that you guys have been trading this morning. And some of you guys did really, really well. Just be careful trading the rest of the afternoon. If you've already got close to your daily goal, hit your daily goal. You guys know the drill. Maybe start to reduce your risk. Start to move your way out of the markets and go on with your day and take your daily goal and be out of here. And there was some news over the weekend, okay guys, in Iran. Their president in the helicopter, still under investigation, but he is dead. So there was a helicopter crash, they were saying, in all of the fog in the mountains out there. Who knows what happened, but that could have impacted a little bit of news in the markets maybe this week, the way how markets opened up, but that is big news. So we follow these things. Well, I follow these things. I follow all of these things. I don't know if most traders follow these, but I do. So what we're going to do is, over here on Bookmap, if you guys are wondering what this is a live liquidity platform. It's a futures platform. So I have over here GC. This is gold futures. So if you are watching over here in the book, we are currently above the VWAP. I have it on the 15-minute time slices. So this is 10 a.m., 10:15, 10:30, 10:45. We just started this call right now at 11. So you can see our offers above us. You can see the bids below us in the current order book. Cumulative volume delta currently is negative 450. So there is some absorption on the sell side. With this big move coming up here, but it could continue to cut through all of these offers. These offers could get pulled, and gold could still could continue to make some bullish moves and some new highs up here. And then we'll take a look at US30 over here. And but first, let's get started with news over here on Forex Factory. So I'm going to kind of walk us through the entire week. So this was today, Monday. If you were trading in Europe, in London, you can see that there's a lot of European banks closed today. So we had Swiss banks closed, French banks were closed, German banks were closed. As I was saying, Canadian banks are closed today. So the only thing that's really open today are the U.S. banks, and the U.S. market is moving. But Europe was pretty slow closed. Same with Canadian banks over here. We do have some speakers that have already spoke this morning. We had FOMC member Bostic speak, FOMC member Waller speak, FOMC member Barr speak, FOMC member Jefferson speak. At 2 p.m. later this afternoon, we have FOMC member Mester speak. So a lot of speakers today. We don't have Powell speaking. He spoke yesterday. And it had nothing to do with any monetary policy. He was just at a university and speaking over there. Okay. Tomorrow, Tuesday, you can see that the news really picks up tomorrow. There is a lot of folders. Again, we start off in Europe. We have European news. If you are trading at 4 a.m. Eastern, 1 hour after London market opens up, ECB, the England Central Bank President Lagarde, speaks at 4 a.m. Make a note of that. Okay, it's an orange folder. And then over here we got Treasury Secretary Yellen speaking at 4 a.m. as well. So Yellen can push the markets as well. She's the Treasury Secretary over here, Janet Yellen, in the U.S. So she can push the markets. Make sure just pay attention to what is said. And we do have, I'll show you Financial Juice, which kind of gives a little bit of a summary of what these speakers. So if you don't have time to listen to everything, again, guys, I told you guys this last week. For all of our Zoom members in our Discord, we have the Financial Juice, and I'll show you like how it kind of summarizes all of the speakers there. And then as we move into 8:30, there's a lot of Canadian red folders. We have CPI month over month, median CPI year over year, trim CPI year over year, and our common CPI year over year, and our core CPI month over month. So lots of CPI news, inflation news coming out of Canada. We'll see how that affects Canada and how this could eventually affect United States. At 9 a.m., right before Wall Street, again, we got some members speaking, Waller and Barkin, Williams, Bostic, all speaking. Then we have Wall Street market open. These speakers are not stopping all day. Tomorrow, Barr speaks. 1 p.m. Eastern, when we get on our call just near the end, we have a British, and the Bank of England Governor Bailey speaking, and then speakers, and then we move into our Tokyo, Australia, New Zealand session over here. Okay, so that is Tuesday. Wednesday, midweek. Wednesday, British news, lots of British news. So like how we had all of the CPI data for Canada, then there's some CPI data coming out of the UK. This will be Wednesday morning, pre-market, pre-London, 2 a.m. Eastern. You have your red folder, CPI year over year, core CPI, PPI input, PPI output, public sector net borrowing, and some other folders over here. Okay, and then as we continue to move into New York, pre-New York, there is some German 10-year bond auction. I tend to look for bigger folders. So we don't have much at 8:30 a.m. Eastern on Wednesday. We move into 10 a.m. US has their existing home sales, 10:30 crude oil inventories. If you're a crude oil trader, pay attention to the oil inventories every single week. We have over here 2 p.m. on Wednesday, USD red folder, FOMC meeting minutes. Okay, so I like to clarify this as I always do. This is not the FOMC meeting where Powell speaks, where there's an actual federal fund rate like 5.5% and they pause, increase or decrease, and then 30 minutes later Powell comes to the podium and answers questions when we have that high volatility. This is just a summary of what was said when we had our last FOMC minutes. This is our meeting. This is just our minutes, a summary of what was said, and moving into our FOMC meeting in the next few weeks. Okay, so it is a red folder. It is volatile, but it's not a conference or anything like that. It's just some minutes and a summary of what was said. Okay, so I see a lot of traders confuse this. Okay, so let's get better at understanding what this is. Just a summary of the FOMC meeting. And then we move into, again, if you're going to trade the Sydney, Australia session, New Zealand over here, and then leading into Tokyo, you do have your news as well for your specific currencies and countries. Thursday, big day in Europe. Okay, so over here, you guys will be doing all of these sessions with Shahab. Shahab will navigate you through all of these folders. Starting at 3 a.m. is when London market opens up. Then you got 3:15, 3:30, 4 o'clock, 4:30. So you can see consecutive red folders coming out of Europe. You have all your manufacturing on Thursday. So you got your French manufacturing, German manufacturing. You have your European manufacturing. You got your British manufacturing. Then this is day one of our G7 meetings starting on Thursday. We have some members. Then we move into our pre-market, our New York sessions over here, pre-New York. Every single Thursday, week over week, we have our USD red folder unemployment claims. So from last week, we were 222,000. They're forecasting pretty much the same, 221,000. We'll see what the actual number is here. This is how many individuals are applying for unemployment claims every single week. So we're going to see, is this number going to be bigger? Is it going to be smaller? Is it going to be pretty much the same? Okay. And unemployment claims helps to let us know an overall reading of how the economy is doing. If more individuals are applying for unemployment, that means that they're not working and they're looking for claims, and that's not good for our economy. So we need these numbers to be low so that there's not a lot of people applying for unemployment and people are happy working and contributing to our economy. Okay, so we'll see what those numbers are. 9:45 when we get into Wall Street, we've got our US flash manufacturing. So it's an entire day of flash manufacturing PMI. New home sales, you can see that it's a little bit of a decrease from the previous month over here, 693,000. They're forecasting a little bit of a drop to 674,000. New home sales, the interest rates are really high. There's not a lot of individuals going out and purchasing new homes currently, so we'll see what the actual number is here. We got natural gas storage and a few other things. Okay, and then finally we lead into Friday. Thank God it's Friday over here. Let's see what Friday brings us. And Friday brings us a little bit of European news, some British retail sales month over month. You've got your Swiss chairman Jordan speaking over here. And then we move into 8:30 on Friday, some Canadian US news, core retail sales, core durable good orders and durable goods, and then FOMC Waller speaks right at when Wall Street opens, and then we have our 10 a.m. revised University of Michigan consumer report. And that will be our news for the week. So you can see which days are more significant than others, and today it's all about the bank holidays over here. So we had all of our European bank holidays, Canadian bank holidays, so you can see that how the markets are moving today. We don't have anything. Okay, earnings for the entire week. What I like to do real quick is I like to look at the calendar, get a good look overall bird's eye view of the entire week. I have 22 Pre-market earnings today, 21 after the close. Tomorrow, 22 pre-market, 9 after close. Wednesday, 26 pre-market, 19 after the close. Thursday, 26 pre-market, 15 after close. And Friday is a really light day with earnings, 4 pre-market and 0 after hours. So now what we can do is we can click on the specific days and we can start to see the bigger names who are reporting. So let's just real quickly go over the earnings for the week. So this is today before the open. Again, I'm going to go a little bit faster. Is there any big names that stick out to you here that could affect, maybe you're trading an index, maybe you're trading the S&P, maybe you're trading NASDAQ, maybe you're trading US30. Is there a big name here that will affect your specific indice that you're trading? I don't see any big names pre-market today. What about after hours? Zoom, okay, we're on Zoom right now, so we're using Zoom. So maybe we want to see what Zoom is doing. We can trade Zoom. We can invest in this company. It was a good time to invest in this when COVID started. If you look at the price of Zoom when COVID started, then everybody was using Zoom. My kids at school were using Zoom. They were staying at home. They were doing Zoom. We were doing Zoom. Offices were using Zoom. So if you saw the price, how it went up from COVID to that was a good time to maybe trade or invest in Zoom. So every day always offers opportunities, what you can trade, what you can invest in, but it's just thinking, guys. You got to think a little bit. When the world shut down during COVID, what were people using? And then maybe that's where you got to start to brainstorm and make a little list of what you're looking to trade or invest in. And Zoom was a really good one during COVID. Okay. So just going through these names again, no real big names that I can see that might impact the entire markets today. Let's move into tomorrow pre-market. So Tuesday morning, Lowe's. Okay, so I follow these big box retailers. I follow Home Depot. I follow Lowe's. I follow Walmart. I follow Costco. I follow these things because I like to know what's going on with the big box retailers. I do trade Dow Jones as well, so it is comprised of these things. Macy's. I like to know what's going on with retail spending. AutoZone and things like that. That is retail spending. So I like to know how retailers are spending their money in times like this. After hours, Tuesday. See, I can't see any big names, so it doesn't really excite me or anything. Like if I see Apple right here, then I get excited. Then maybe I need to really look at what Apple is doing and things like that. Okay, so Wednesday. Okay, so now we're getting a little bit more. Target. Okay, so Target had a lot of retail. It's a retail giant here, but they've had a lot of closures all over Canada and the United States, so they're not doing really well. They're closing businesses over here. We'll see how that affects their earnings. So we'll look at earnings per share, revenue. Their growth looks negative. I can't see Target having too good of earnings here with store closures and things like that. You might know in your city, your town, because I had a couple Targets here where I am in London, Ontario, and they've all closed down. So I don't know where you guys live, but what do you guys like? Are Targets doing good? Are they closing down? Then we'll look at the earnings. After hours on Wednesday. Okay, now we're getting a little bit the big names that we recognize. If you don't recognize NVIDIA, then we got some work to do. Okay, so this is one you want to circle, you want to highlight, you want to put a star beside this because this will move the markets. Okay, so NVIDIA, this is our graphic chips for everything we use in our everyday life over here. It is reporting at Wednesday after market close at 4:20 p.m. So you better believe I'll have a joint in my mouth and I'll be watching what NVIDIA is doing at 4:20 right here. Earnings $5.54 per share, revenue over 24 billion. Look at the growth, 236%, guys. This is ridiculous. Like this is a big corporation. I remember a couple months ago this was $200 a share, and then it went up to $900, almost $1,000 a share. It had a big move. So Nvidia, and then if you're trading Nasdaq, if you're trading S&P, Nvidia is a big component of that index, so make sure you are aware, make sure you're ready, whether we're trading or not, you're watching, you're seeing, because this might affect the way how we move into Thursday, how Friday moves, and how next week moves. Okay, so this is what I would circle, and this is the one what I mean. We look for big names, and then we start to look midweek Wednesday after close. Then there's Snowflake. There's some other corporations, but you can see how Nvidia is the big one. That's the one I will be. Yeah, Noor, Nvidia is the market maker. Jensen said it himself. Yeah, I believe that too. This is a mover, like it's a giant over here, and not just Nvidia, AMD. There is Intel, like there is some other microchips out there, but semiconductors and graphics, but this is the big one. Nvidia is a big name. Okay, and let's move into then Thursday morning pre-market. We've got Ralph Lauren, BJ's Wholesale Club over here, TD Bank. Okay, so guys, I'm invested in TD Bank. I have shares in this company. I do receive a dividend with this company. I like to see what they're doing, because maybe I'm going to start to trim my position here if they start having shitty earnings. You can see over here their growth is negative 44%, so we'll see what TD Bank is doing. I follow banks, regionals, big banks. So this is another thing, guys. Find what you're interested in and follow that market. I'm really interested in banks, so I've been following banks all my entire life. I follow the smaller regional banks, I follow the bigger ones, and I follow the giants. So I'm not so much into tech. I'm being honest with you guys. I'm not so much into tech, so I don't really follow like the Nvidia and those ones as much as I should. I follow them for the market moves, but I'm more passionate about banks, and then I do my learning over here, and I follow these and I trade them. But not everyone trades banks. Some of you guys do other things. So just find what you guys enjoy, find what you guys are passionate about, and devote a little time to it. And you don't have to start with everything here. You can see there's a lot of corporations, and I don't even care about CSW Industrials. I don't care about KNOT Offshore. I don't care about Monroe. Like you see, I don't really care about these because they don't affect what I'm looking at, or will have as big as a move as TD or Nvidia, the bigger names. Okay, so I know it's overwhelming looking at all of these, but just focus on the names that stick out to you and the names that you recognize. That's a good start. That's where we start. Okay, and then we move into Thursday after close. Intuit, Ross Stores, Deckers Brands, Workday, Silvercore over here. Again, not too many big names, and you can also trade these things individually through options if you like. So you want to get to know them, just like you get to know your Nasdaq, you get to know your US30, you get to know your securities there, get to know some corporations as well, and then you can become that much better of a trader. Then we move into Friday morning, real light day. Pretty light, and then there was nothing on Friday after hours. Okay, so just from all of that, our big day is Wednesday with Nvidia. Okay, let's continue moving over here to our Discord. This is our Discord Signal channel. We also have our other private Discord channel with all of our members. This is our signals only. There was a few signals that came out today. This was on US30, and you can see we're looking for buys above 39,970. It had its big dip right over here during Wall Street market open, came back up, and then we get our volume close above there. Once we get confirmation of volume close, we also got a retest anywhere in this blue box. If we're in a buy above 970, we place our stop loss below structure, and then it started to run back up to this resistance. It popped out a little bit to 85 pips, and you can see we're trying to break this previous big resistance level over here. Okay, so that's a nice little move for about 85 pips. And then gold, looking at gold over here in the commodities section, gold, oil, silver over here. Kind couple moves too. So you can see like how we're taking these trades. We're looking to take above 24.16. There was a nice little sell-off. It came back down into this pocket, swept the liquidity, came back up. We got a closing bar above 21.16, and then you just do your technicals the way how we teach here. It opened, short wick, small pullback, and gone for approximately 60 pips on that. And if you look at the overall here, kind of like a double bottom, continuing to move out of here. So those are our signals, guys. If you're looking for signals, we do provide them if you just want signals only for like $1 a day. But I highly recommend that you join the entire team here so you can get all of the live sessions with myself, with Shahab, with Dave in London, New York, and post New York and Tokyo sessions. And you get all of our education along with the signals. And you're also part of the SST other Discord channel with the entire team, and you guys are trading and sharing charts together. This is our free Telegram channel right over here. I have it pinned at the top of the YouTube channel, so thank you everyone on YouTube for joining. I appreciate all of you guys. This is what we show, what we do here at SST. We do take our signals, we do trade them as long as everything, we get our confirmations, we get our retests, we get everything. We don't just jump in blindly. That's what we try and teach here. Before and afters, the trades that we take, some promotions going on right now, guys. So you get the 3-month subscription and you include everything. It's normally $149.99. Now it's on sale for you guys for $112.99 here. Use this coupon and you can get everything and all of those additional things provided. This is our schedule for this week. Dave is taking a couple days off this week. He'll be back Thursday and Friday, and then we have our Monday, Tuesday, Wednesday, Thursday post. And then I have to take Friday off because I have a field trip with my daughter all day. We're going to the insect farm and we'll be looking at ants and all types of insects all day from 9 till 2 p.m. So guys, unfortunately I won't be able to be with you guys, but I got to go with my daughter to grade 2 field trip. End of the year field trip, so it should be some fun. And then you got all the live Londons with Shahab and our SST Scalper Pro guys, and quotes and everything like that. We love quotes, we love good motivation, and everything is in here for you guys. This is our free Telegram channel pinned at the top of the YouTube. Please guys, join this. There's our website, so you're not getting scammed or taken anywhere else. That's our stockstimefortrading.com, our official YouTube channel right here. Thank you guys for the subscribes, the likes, and the comments. And over here, SST Killshot. If you're interested in a EA Expert Advisor, this is at MQL5. So just click on the link and it will take you over here. It will explain what the SST Killshot indicator is. You got some reviews, and you can download right here a free demo, and if you do decide to use this, you can rent it out, and then you're put into the official Telegram group here, and we have a developer on call 24 hours a day helping out new set files, and you can ask questions in there. Okay, so that's the SST Killshot. Now let's get into the markets, guys. Let's get into our charts. What is everybody looking at right now? What are you guys trading? I'm going to start off with gold, and then we'll move into US30. Dan, US30 is just chopping around, trying to be patient. Yeah, you got to. I can see it right now, just chopping around right here. It's not easy. It's not easy, guys, to be patient and wait for some development, but you got to learn. Like, you got to learn on days like this when it's trading like this. You got to learn some patience. Over the long run, you will appreciate the patience, you will appreciate the discipline. So what I'm going to do is we're going to get started with gold. Right now, this is how it looks on the 5 minutes. It is slowly building its way back up here. It was consolidating, it was barcoding where it was green, red, green, red, green, red, and slowly it's making higher highs and higher lows. We'll see how far it can tap into this liquidity back here. Maybe we'll get pushed back down and we'll come back, but it's still building a little bit of support here at 2016. It's building a little bit of support at 2020, 2420 right here. So let's just do a full top-down analysis, starting with the daily and then we'll break it down back, come back down to the 5 minutes. Okay, so I'm going to start off with the daily of gold. We'll take a look at everything that is going on lately in gold. I have it over here on Bookmap. See now the cumulative volume delta. You see where we were negative 700, 800 before we started the call. This is 10:30, 10:45, 11 we started the call, and then look at it, came all the way and it kind of balanced itself out right back to zero. So that was where it balanced itself out. It came from negative cumulative volume delta right back to the baseline of zero, and this is where maybe now it may push back down or might just consolidate here, and then we're going to start to make our way back up. Okay, so the market now is pretty balanced, and the depth of market is balanced. So let's take a look at gold overall on the daily. If I look over here, like I can go February, so I'm on the monthly then, you can see that it's making strong support of gold, making higher highs. Again, we come into March, it's making good support here at 2150. Kind of, these are individual daily candles. So just like how we saw those 5-minute candles were barcoding red, green, and then daily candles can do this as well. It's a longer time. It might take 1 week, 2 weeks, 3 weeks of consolidation, but they continued to break it to the upside, and gold kept pushing. Why? Because maybe of geopolitical events, maybe because of the overall economy, maybe because of inflation, maybe because of uncertainty around the world, maybe because of a hedge, maybe because of a safe place, a safe haven. That's why gold is approaching and beat all-time highs. So it shouldn't be a surprise to anybody why gold is at all-time highs. Considering everything happening around the world, gold is a safe place to park your money, not just for retailers like you and I, but for investors and big corporations and countries and everything. Okay, so this was our previous all-time high right up there, 2430. You can see today we broke through that wick and we created a new all-time high. And where did we get up to? That nice psychological level of 2450. We tapped right into that exactly. You can see the high, 2450.125. So those are how you can use psychological zones to your advantage. You know, if you don't know where things could go in price discovery, you got to use some psychological numbers, some whole numbers, and that might help you out. Okay, but just looking at the previous all-time high, then we retrace back down. You can see it kind of held right there. There's a nice little pivot of support. Excuse me, right in this zone right here. So what I'm going to do is I'm going to bring this zone into the future. So if gold ever does come back down, trades in this green box around 2280 in here, maybe this is where the support will be, and it might continue to go back up. If volume closes below this green box and it comes back up and retests and gets rejected, then we might be pushing back down where? To our next zone, which is right here, 2150. You can see where the market consolidated right there. It held, so I'm bringing that zone across. So this is how I do my bigger picture of the overall, but you can see that this is resting in the market since March, has not been tapped into, but this zone up here has been resting since May and has not been triggered yet. So these are resting blocks in the market, similar to what I have over here on Bookmap. You see this big red box up here, this big red heat? This is resting in the market up here at 2432. It might get triggered and it might get active, but it's close to being near the price action. But these ones are nowhere near, but they are passive demand maybe in the future. But you can see we're nowhere near them. So the market is continuing to make highs. Here is another one. If I'm looking down here, like I could place another one, but that's nowhere near where we are. So to me, it's just a waste of time if we do that. We need to focus more on where the current volume is. Now, where can we do maybe a red box? Okay, so what I like to do is what I was doing before was our all-time high was previous right here, and then I was bringing it down to those boxes. So if you have been on this call with me the last couple weeks, this is what I have been doing. I've been making that previous all-time high wick right up here on April 12, and I bring it down to the bodies, and we had this red box going across our charts. And we were watching last week how we were coming into the red box and they pushed it down, made support, big green candle on Friday, come right through there, and then closing to the high. And then now, following news on the weekend, you know, the Iranian president in the helicopter crash passing away, could that have pushed gold to a new all-time high? I don't know, but that is significant news. You know, like if you follow everything that's going on around the world in the Middle East and war and things like that, that is pretty significant news, in my opinion. But what happened? Let's now follow today's volume off of Friday. So Friday was a very strong day for gold. It opened very, very tiny pullback right there. There's the wick, and just continued to drive right through here to our high of the day, and then it closed right there on Friday. Sunday, Monday, when we opened up this weekend, started of the week, gold opened, and it was initially bearish where it stopped right there at 24.07. So I'm going to place a purple line at our low of the day, and we're going to follow now the volume. Okay, so it came to our low of the day, and then it came right back to where we opened, and then we took out Friday's high. Okay, right up there. So what I'm going to do is I'm going to place a yellow line at Friday's high just as a point of interest, because that is a critical point on Friday. It was Friday's highest point of the day. So maybe we might come back down and trade into it. So you can see it's sitting at, the yellow line is 24.22, and we're at 24.26 currently. So it's about $4 away, about 40 pips away. If it does come back down, we'll see what type of reaction we get at the yellow line. Will it hold there? Friday was resistance. Today, will it be support? If we cannot hold Friday's high, 24.22, then sellers might continue to push it right back down to where? Right where we opened and where Friday closed at 24.15. So I'm going to place another yellow line right at the bodies. And now I'm kind of maybe figuring out some key critical point of interest levels. If we can't hold this yellow line, maybe we'll come back down to that yellow line. Then if we can't hold there, that's our low of the day. I'm expecting that they hold the low of the day. And then now if I'm looking for like a good fair value gap, you see that wick from today, and then you see the big green candle that drove through here on Friday, and then the next wick I have is right here on Thursday. So you see there's a little bit of a gap, that bullish green volume. This is where now I start to draw a green box. I use my purple line as reference, that red wick right there, and you see that little box I just drew right there? Okay guys, if you don't know what I'm doing, just let me know and I'll try and explain this a little bit slower. So this is where I'm finding my fair value gap, or another word is, this is volume in the market that has not been triggered yet. It's kind of pending. So you see here, it was that big bullish move, and then we pulled back yesterday and it stopped right there. So you see there's still this bullish volume that still hasn't been tapped into. So if we do come down into here, I'm expecting that all of that volume is waiting in the depth of market, and maybe it will get activated and it's a lot of bids, and then maybe it will come and shoot back out of here. Okay, did you guys understand how I did that box? Because this will be on all time frames. This won't just be for a daily. If you see this kind of setup on 1 minute, on 5 minutes, on 15 minutes, on 30 minutes, on 1 hour, it's the same thing. Okay, do you guys understand what I just did here? And please guys, stop me, because today is more of a learning session. It's not going to be too busy this afternoon. This is more important to me, because then you know how to do this Tuesday, Wednesday, Thursday, Friday, when we have real trading to do. Okay, right now I know all the banks are closed, but please guys, understand what I just did here. If you don't know, it's okay, ask a question. Okay, do you want me to go over it again? I see some of you guys, how did you get that gap? Paul, good explanation. Okay, perfect. Did you guys get it on Zoom? You guys got it? And then what I do is, once I identify it, I bring it into the future. Okay, I don't know. This is what I always say. Right now the volume is up here. I don't know if we're going to come back into this green box today, tomorrow, this week, next month. Maybe gold doesn't even come back into this green box. Maybe we're closing up here today and we're continuing driving for new all-time highs. But we have to identify some zones just in case. So I'm stretching it into the future, right? So all I did was just follow the volume and the wicks. There is a lot of gaps in the market. You can see even below us, there's some gaps over here too that haven't been played into. So, this is a bigger zone from here to here. But also this zone right here. You see this big green candle that drove through here and then had that continuation. Then there's our pullback. And right there, it's holding support where? Above 50% of the candle. I can have another green box where it used to be resistance right there turned into right there. See how it's support now at 50%? See that red candle where it dipped down into, and the next one was green and continued to go up? Now that could be my next zone across. I can continue to do this, and then I'm finding now my trading zones. Some might be bigger, some might be smaller. It all depends on what type of trader you are. Okay, I'm more of a scalper, so I like to find more zones because I like to scalp smaller zones. These are bigger areas if you're doing more swing trading and you're looking to hold. Okay, so let's just continue moving forward. Now, remember our previous all-time high wick was right there at 24.30. So you can see it's at the top of the red box, and today's volume, we broke out really strong from Friday's high. We took out right there. That was our previous all-time high. So this top of this wick today, 24.50, see how it's up there? Nice psychological area. Came right into that 24.50 block. I'm going to make that a purple line. That is not only is it our high of the day today, but that's a new all-time high for gold. So that's exciting, guys. Watching securities hit all-time highs are exciting. Okay, so what happened when we hit the all-time high? We got rejected. I'm going to remove this red box. Don't want to confuse people here, so we can focus on here. So that's where we came up. We hit our all-time high, and you can see that it's been a big rejection since we hit up there. So what I'm going to watch this afternoon is where's this closing volume going to close on gold today? Is it going to close kind of above Friday's high? Will it come back, trade into this wick, close up here? Or will these sellers completely reject today's green volume and start to make it like a bearish pin bar and maybe start to push it down? Okay, so if now we got a rejection, if we get some closing volume, red volume this week on gold, close maybe below here, come back, retest this, we flip green to red, we might be pushing down into this level or maybe even the green box. And then if you're in a sell, like selling all the way down, this green box might be telling you, hey, I got to do something here. I either got to scale out a little bit of profit, maybe bring a trailing stop loss down, go to a break even, but you got to do something because the green box is here for a reason. I'm not just because Ron put it, but if you look at the volume, it's untapped volume here. The buyers could be sitting right there. So when the sellers are selling the market down, they need to find buyers in order to liquidate their position. Okay, if I'm selling the market, the only way how I make money is to sell high, and then I got to buy back my position down here. So I got to find where are all of the buyers. That's who I want to exchange with. So the buyers are in here, right here. The buyers are in here. So if you don't do anything, this has a possibility of coming down here and then going right back up. So you got to at least think of doing something here. But sometimes it cuts right through. Sometimes it will cut right through here and close below. And then when it comes up for the retest here, it's a shallow retest and gets rejected there because now this zone turns into supply and then maybe it pushes back down to here. Okay, so you just got to watch how the volume when it comes down to these zones. But have a plan. All I'm trying to say is make sure you have a plan when you're trading. I have a plan every single day when I trade. I have a plan for every single candle when I'm scalping. I have a plan. I'm never trading blind, or I'm never just guessing where it's going to go. If it comes down to a destination, I make a move. It's kind of like, this is point A, this is point B, this is point C. If it comes from point A to point B, I need to do something, because it could reverse on me and go back up. We've seen that when I've been scalping. Sometimes I go into 20 pips in profit on a scalp. Remember, on the 5 minutes where the zones are smaller, but it comes down to a similar green box, and I don't do anything there because I want more and I want more and I want more. I want 30, 40, 50 pips, and then it stops right there and reverses on me and comes right back to where I entered, and then I exit the trade with a break even. So same thing can happen here. Even if you're a daily trader, it might come all the way down there. You might be up 700 pips, 500 pips, and then you don't do anything, and it could reverse back up. So just be disciplined with what you're doing and have a plan, okay? Now what we'll do is we will break down today's daily candle, okay? Because I can only see where it pushed to the all-time high and then got rejected. I don't know when and where when that happens. So what I'm going to do is I'm going to break the daily candle down into hourly candles, into 60 minutes. This now will give me a better picture to understand when we hit the all-time high, how it got rejected. So you can see over here on Friday, 10 a.m., this is kind of Wall Street, Friday afternoon, we drove through here. Sunday, okay, 8 o'clock, this is when the futures market opened up. Gold was really bullish. Could have been on news on the Iranian president and overall just some things happening over the weekend, and gold continued to push up. And look at when we tapped into the all-time high. It was 1 a.m. Eastern. We hit right up there. Now I can see exactly when we hit our purple line on the hourly. It was 1 a.m. 2 a.m. pre-London, they brought it right back down red. Here's London, 3 a.m. consolidation, 4 a.m. 5 a.m. came back up, lower high, they pushed it down. 6 a.m. this is pre-New York now, close below. 7 a.m. push it down. This is COMEX market open, 8:30. They really flushed it all the way down where we hit our low of the day, and then we came back up at 9 a.m. and 10 a.m. and here we are at our call together, 11 a.m. It came right up to here, and now pushing it right back down. So our 4-hour candles, you see how there's these 3 red candles right here, 1 red candle, 2 red candle, and then the big red candle right here. You see this area right here, kind of this body to this wick. Remember what I was doing the opposite on the hourly? What about this zone on the hourly? Look right here, guys. See that wick right there, this wick of this candle at 6 a.m., the bottom wick, and then see that little zone that I just brought it across? You see where it came down, closed right there, and then the next body right here at 8 a.m. was an ignited red candle. You see how we haven't traded into that red? So what I do is bring that box across. Guys, did you see how I did that now for the red side, for the hourly push down? Now I found my bearish hourly fair value gap. See here? No, we have not tapped into this red box yet. This candle we're on came green, green, green and stopped right there. It almost came into here, but didn't. So they're pushing it down. So at another time, maybe if we find maybe a bottom and then it comes back up here, that's where possibly the big sellers are waiting to reject the move down. Does that make sense? That's a bearish fair value gap coming down that hasn't been tapped into. If we close above here, okay, it's not always going to be 100% like this, but if it comes up here and maybe closes above, then what I do is that same red box, I flip it green because I look for it to turn into demand, and if it does, like when it closes above, I flip it green, right? Flip it green, and then I look for the retest, and then if it turns to be a solid area of demand, I'll look to buy, place my stop loss below this structure, and look to see if it will come back up and attempt the all-time high. Okay, does that make sense, guys? So we talked about the daily fair value gap, we found one, and now we found a bearish hourly fair value gap. So again, I'm going to just put it red. Okay, so you see now how this is still resistance in the market. Okay, right here. See that? How it's still using that. I bring it across. We almost came into it right there, but we didn't. So I'm going to continue to stretch it across. And what I see is maybe they're building a lower high from the all-time high. Okay. And now we're kind of just, does that make sense, guys? Everybody? I'm not seeing much interaction. You guys got that on Zoom, YouTube? You guys got that? Remember, you can see this on any time frame. Okay, I showed you how to identify one on the daily. I'm showing you how to find one on the hourly. I can also show you how to find one on the 5 minutes. I can show you how to find one on the 1 minutes. I can show you how to find one on the 10 seconds. It doesn't matter. All candlesticks have the same characteristics. It's okay. So once we know that, we can do this on any time frame. The only thing is you need to pick what time frame you prefer trading on. Some traders prefer hourly trading, some prefer 4 hours, some prefer daily. I myself prefer 1 and 5 minutes. I'm a scalper, but if I wanted to trade hourly, I could, this would have been the hourly setup that I normally take. If this was a 5-minute setup where it closed below, it's pushing down, closed below all this structure. If this was a 5-minute ignited bearish candle, you guys, if you guys know me, you know I'm either selling that head or the break of that candle. On an hourly candle, why would I not do the same thing? If I was an hourly trader, I possibly would have taken this sell right there at the break of that wick. I would have possibly placed my stop loss either above this candle or to the zone. And then where would I have taken my profit? Maybe coming down to the green box. And you see how it came red, tapped that green box, and then came back up. And then look, it almost came to where you entered the market. So if you're on an hourly candle, you know, I measure the move. Okay, so I always, doesn't matter if I'm on an hourly, 5-minute, you guys probably always see I take my ruler and I measure it down. That's a move of 200 pips down there. Okay, from over here, from 24.27 all the way to 24.07. That's a $20 move in gold. In 1 hour, you could have made 200 pips and you're done for the day. And if you don't do anything, you see how it can get a wick and come right back up, and then you're left with nothing. So even hourly traders need to learn how to do something at these boxes. Okay, so let's just now look what's going on. So we found a bottom at our low of the day, and it's coming right back up. You can see half of that big red candle, open, close, half of it is right around here. And you can see how where the volume now is kind of real concentrated. We're right back at the 50% point. Okay, so this is where market might trade sideways, and some of you guys were saying on the 5 minutes it might be getting choppy here. I can see it on the hourly too, myself. So maybe what we got to see is our hourly candle has 12 more minutes left. It is a indecision candle. It opened, it came up green, came down red, coming right back up, and we're right here. So let's see where it will close. Will we have now our next leg in the next hour? Will we continue to push back up to this red box? That's one path, one possibility. Or will we shoot back down to maybe this yellow line down here? Okay, and those are our kind of paths. Or we're just going to consolidate in this area. Okay, but now what I do is I tend to move to the lower time frames. I tend to go to either the 15-minute or the 5-minute, but I like to overall see what's going on the hourly. So look for bigger moves. So here we had our big move to the upside. I consider this whole thing one top. So when I put my arrow up there, that's one whole top. We came down with this leg, so that was the pullback leg, and now we're coming right back up with this leg. So are we going to come into this bearish hourly fair value gap? And what will happen here? Will they use it as a lower high and push the market back down? Or will it come down to here for support and then maybe break out of here, close above, and then we're coming up for the double top all-time high supply up there? Okay, but again, I don't know the path exactly it will take, but I like to follow candle by candle, bar by bar, and see what it does, and then make my judgment and get into a trade. I can show you guys 100 different paths that it could do, but again, that's not going to happen, right? But it's good to know the paths, but more importantly, it's good to know where the volume closes, where it closes, and how it closes. Now, when I'm looking at the 5 minutes, these are normally the candles and the time frame that I trade. Okay, so you can see they look completely different from daily candles, like the way how they move, hourly. Like you can see that the 5 minutes are more consolidated. The hourly candles look like they were moving a little bit more. So these things too. Right over here, we started the bottom right there. That's when we hit the bottom. Now I can see exactly the time. At 8:40, we hit the bottom, and it started to come back up. So you can see that the 5 minutes, see this big green candle right here? If you just look at half of it is right around there. If I drew my halfway box on that green candle like I normally do with how I showed you from the daily, hourly, and why would I not do it on the 5 minutes? If you find your little halfway, then bring it kind of across. Okay, so that's half of that green candle right there. And if I brought it into the future at 9:35 in Wall Street, that's where we came up, we got rejected, it came back down during Wall Street, kind of held the green box at 9:45, continued to push up. But you see how no volume is kind of closing above this yellow line? So that is showing me my resistance right up there. The yellow line, see how it got rejected right there, it got rejected right there, and got rejected right there. So that is all red. See, it came up there, rejected. Into the green box, and we go back up. Came into the red box, we got rejected. Sideways, red, green, it tried again to come back up there, then they rejected it. But you see how we're building higher, low? Have we tapped into this green box? No. Is there any other? I can see right here, this big green candle, half of it is still holding above here now. Okay, right there, it's still holding. I use past to dictate the future. So someone will say to me, well, Ron, you're doing this because you can see it in the past. Yeah, well, that's correct. It's been respecting everything in the past, but now I'm trading into the future. So this is one area of support, 24.19. This needs to break before it can come down to this green box. But before it gets to that green box, we have to be cautious on this yellow line because that's a critical daily pivot point of interest right there. And now you see, if I bring this red box across that we saw, now we're actually got volume closing above it, so I do have to use it as green. I know it's getting pretty congested in here with all of these other green boxes, but it's still holding. So in order for me to sell, it's tough to sell gold right now because we still haven't closed below this. We haven't closed below this, so this is turning to support. This is turning to support. This is strengthening up the depth of market. But now I start to see what they're doing up here. It came up, rejected, came up, rejected, came up, rejected. Where? Into this zone right over here. So now what I'm going to do is sometimes I wait and I consolidate. So I'll consolidate this entire down to the bodies right there, and then now I wait. I'll bring it down to here, and I'll just wait. I'll see what the market does. If it continues to push up, I might take a buy up here, but it's got a wick that got rejected, a wick that got rejected, a wick that got rejected, and another wick that got rejected. So I need to get maybe some positive closing volume above here. I don't want to just take another impulse green candle breaking out of here and then it gets rejected for the 5th time. Okay, if they hold this down and push it down, I might start to look to maybe sell gold below 24.21 down in here. Like if it comes down and closes below here, I may be looking to sell gold below here, And if I do get into a sell below here, then my next thing is where do I place my stop loss? Am I going to place my stop loss right above the zone? Am I going to place my stop loss above these wicks? That I'll determine that when I take the trade, but I'm just trying to walk you guys through what I look for, where to place my stop loss. Then I look to see how it will react down here. If it can break here, maybe it might come all the way back down to that yellow line. I have to respect that yellow line, see what happens there. If it does break, then I really have to respect that green box down there, because that's where it could come down and go right back up. Okay, so that's maybe a sell idea, but I'm not going to just take it right now because it's still consolidating up here and it still has support. So this thing could continue to drive. See how this red candle came down, red, and it's going right back up. So it triggered an order of bids, and it could continue to drive right back up through here. And if you look at the overall trend, if you draw like trend lines from here, kind of trending up, it's still ascending. It's still going up. There is a couple impulse breaks where it broke down there, but if you wait for the candle to close, it closed back above there. This candle, red, broke that, but came right back up and closed above. Right here, this big red candle broke, but came back and closed right there. Okay, so gold, I'm gonna continue to wait on it, maybe see what develops down here for maybe a potential sell. But if it continues to move up here, might be looking to continue buy. If we add some EMAs now on the chart, 9 EMA, let's take a look at where the 9 is. We're right at the 9, right there, this green line. The 200, okay, so the 200 is right up here. So where we're getting rejected, it's right about the 200, okay? So maybe if they keep it down here, this might be an opportunity to maybe look to sell gold down in here, okay? RSI, where we at? RSI, we're right kind of at the 50 right here. See where we're bouncing right there at that 50. Okay, if we can get the strength below 50, then the strength might weaken, and then it might allow sellers to really push it down through here. Okay, what are your guys' thoughts on gold right now? Right now, your thoughts, not on where it's going to go in the next 2 weeks. Right now, what we have, like what we're looking at in the next 30 minutes, in the next 1 hour, where do you guys think gold is going to move? Okay, I'll give us our possibilities. Okay, if we close above here, do you guys think that we can close above there, maybe retest this, and then fill this previous wick, and maybe we can shoot up to 2430, that red box up there? Okay, if you guys think this path 1 is bullish, okay, so if you write in the chat path 1 or bullish, I know that you're going with this path. Path 2 or B is we continue just to trade inside this box, okay, and it might be choppy inside this box in here. Path 3 or C would be breaking this level of support, maybe retesting this, turns into resistance, we break this box, and then maybe we're shooting down to here. So what do you guys think? And let's see, everybody, overall what we have here. So Cash, you're neutral. Trevor, you're bearish. Lizzie, A, path A, bullish. Sherry, bullish. Mario, bullish. Mo, bullish. Jackie, going up. Okay, so I see a lot of you guys are bullish. Okay, but you know, like everybody has their bias. Okay, you have your bias, I have my bias, everybody has their bias. At the end of the day, what we need to do is we got to wait for volume to close and then give some confirmation to us. But it's great to have a bias, you know, but sometimes our bias is right or wrong at times, okay, so that's trading. But when we take a trade, we don't over leverage, okay, so number one, hopefully you guys are getting better at your leverage, choosing your lot size, those things. Okay, that's another thing that we need to work on as traders. It's not just charting and technicals. There's more to trading than just doing your top-down analysis and identifying candles. Trading is, you got to know how much are you willing to risk on this. So everything I put into what day of the week is it? It's Monday. how is the volume moving? Do I want to go, do I want to save more of my better trades for the rest of the week? Or do I want to start off right now? So maybe I limit how much I trade on a Monday. I limit how much I trade today. A lot of banks are closed today. The time of day right now, it's 12 p.m. Eastern. It's not like it's Wall Street volume, so I need to change things right now. So now let's watch this. We're 30 seconds into the close. We're going into 12 p.m., a new hourly candle. It is slowly coming back up here. Let's see if it closes. Then what can happen at 12? They could maybe fake out the move. Maybe they show us that it's going to go up and then maybe like tap into that wick. It might be a tweezer top high or a lower high. They get us all excited. We all buy, and then they bring it right back down. Okay, that's a possibility. Okay, so we just have to be prepared for what could happen. But there's the close. Okay, so we close strong again, right up there. But we have 1, 2, 3, 4, 5 wicks, and we also have the 200 EMA above us. So it is tough to buy up here. I'm not going to lie. This is an area where it could also be like a double top up here. You see that maybe they formed this one top right there, and then coming back down. Now it could come right back up and then maybe be a second top up there, and then maybe they do shoot it back down like this. Okay, so you have to be, if you're still bullish, that's okay, you're still bullish, but you just have to be cautious. Okay, do you guys understand what I mean by that? I'm being a little, like I like this for a buy setup, but I'm being very cautious up here just because where we are. It's at 12 o'clock. We're kind of like at the second leg up. There's been 5 rejections that we can clearly see, and we're also at the 200 EMA. So, and then now, this doesn't surprise me that there's a big red candle coming down. That's why I said let's have some caution up here. Now I see if it will come down, pick up a wick, pick up the bids, and then go back up. Okay, so, and this is the first minute and a half in the candle. Okay, and then we can look at the order book. We can see up here, all of these wicks where we got rejected up here, we're all up here. So I'm just going to place a yellow line just so we can see if anything changes, like in the order book up here at around 2430 up here. So we did come down red. We came red, 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 still made a higher low, respected the 9 EMA, caught some buyers, and now it's coming right back up. So maybe this candle will flip into a bullish pin bar and a hammer and continue to drive, and then we got to fill this wick right here at 24.27, and then maybe we can continue to drive a little bit higher up here. Okay, so I'm just gonna, so for reference right here, that's our high. What time did we hit it? At 11:30. Okay, so that 11:30, you know, like when I say, guys, pay attention to your hourly and your 30 minutes, 11, 11:30, 12, 12:30, 1 p.m., 1:30, 2 p.m. This is when that move started. You see how they faked out the market at 11:30? Green, 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 green came up there. They rejected it, and then the big red bar came down. Okay, same thing with 12 o'clock right here. Kind of closed it above there. They brought it up, but it didn't make a new higher high, and it's a red candle now still coming down. Okay, so sometimes you gotta have a little bit of patience. Sometimes you're gonna make some mistakes. It's normal. Okay, everybody makes mistakes. I don't consider it to be like a mistake. You know, like it's not. It's very difficult to trade. Number one, it's very difficult to trade. Number one. To hit consistent trades in every single day, it's not easy to do that. Okay, so you will take some trades that the market doesn't agree with you. It's not necessarily it's a mistake. It's just you got to learn from it and just don't over leverage. And when you're not over leveraged, you're learning, and then maybe next time you'll be a little cautious when you see that type of setup. Like I was cautious when this thing opened up, but now it's turning bullish. But now it's 1 minute towards the close. So do I want to buy right now and take an impulse not knowing where it will close and what will happen? I can. Okay, it's a nice hammer candle, but with 50 seconds to go, I might as well just wait it out. I might miss out on a few pips on an impulse. I know I could. I might miss out on that entire wick fill and a pop. I know I will. But if I continue to trade like this every single time I see just a hammer candle about to close, that's where you got to start journaling and back testing and start to see. That's where I was making a lot of mistakes. So I told myself over time, if it's just 50 more seconds to go, I'll wait it out and then I'll see what they do. So it did come up, and then now they're pushing it right back down. But it is a bullish pin bar closing maybe near this area again. Okay, so now we have 20 seconds. So if I took an impulse now when it was coming up, did I miss out on anything? Maybe I did, but maybe the next candle might come down red and put me in drawdown. So you can never just say, oh, the woulda, I could have done that, I should have done that. Just play it candle by candle. Okay, so now I'm waiting. It closed. There's the close. It closed as a bullish pin bar. It opened. It came up green, came down red, picked up a higher low, came up again, closed right there. Next candle now is opening ignited green, if you can see it. Okay, it's a ignited bullish candle, but it still needs to break above this wick and this wick. Still hasn't broke above those wicks. So it came up and then they rejected it. So it still needs to gather more liquidity. You see now how it's coming back down? Now we'll see. Will it grab some more bids and will it come right back up? So I could have taken that impulse candle breaking out, and then now I would have been in drawdown a little bit. So do you guys understand? Sometimes if you just wait it out, it's not the end of the world. Yes, Ron could have missed out on a trade, but what about Ron? If I took that trade, Ron would have been in drawdown right now. So you know what I mean? I don't always just look at I could have, I should have. I look at what would have happened. If I did take that, I would be in drawdown right now, no question. Now that I didn't take it, because I'm being cautious up here as to where we are in the structure of the market, and I don't need to take any impulse trades up here. I can still wait. I can still wait. But if it keeps coming down and picks up a higher low, higher low, higher low, then I know it's still building from the bottom. Then I might be looking, entertaining, maybe a continuation buy to the upside. And when you do trade as well, look at your spreads too. That's another thing I see that a lot of traders are failing to do. They don't even look at spreads. They don't look at anything. They just look to buy and sell. I look at these things. I look at how much are the spreads when I'm trading. Are they going up? Are they going down? I have 0.5 pips for gold right now. So if I am going to take a trade, it's pretty good right now. Like the spread is good compared to how it was before. Okay, so again, we came down red, and then they're bringing it right back up. Okay, so now it's like looking like a hammer candle, turning, might be ready to go and make some new highs up here. Okay, so you see how it came down and back up. Now what do? Do we wait for this body to close in the next 2 minutes, or should we take the buy? I'm asking you guys. What do you guys think we should do? Should we jump in on this candle right now? If you guys say jump in, I'll go in. If you guys tell me to go in, I'll go in. Or do we wait for this thing to close? Wait it out, guys. I'm listening to you. Frankie, wait. Mario, close. Because if you guys tell me buy, Ron will buy right now. And don't worry if I go in drawdown. I'll handle it. But I want you guys to tell me what we should do here. Wait it out. Okay, I'm with you guys. Like, we're going to wait it out, but we might miss out on an impulse. I'm just telling you. We might miss out on an impulse that will bust above this wick and fill this wick right up to there. Okay, so let's measure it just so we know how much we might miss out on. Okay, we might miss out to that. It'll be about maybe 15 pips. Okay, so just from this high to fill up to that wick, 24.27 may be approximately 15 pips we might miss out on. Okay, no big deal. But then let's wait for maybe where this closes. Maybe it might close right above, give us an ignited candle, then we'll take a new 5-minute buy up there. Okay, so we're breaking that previous high wicks, this wick and this wick. Okay, just broke. You see where that 200 EMA is right here? Okay, and here's going to be the close in 15 seconds. Okay, so it came up there, made that higher high, got rejected. Okay, so now again, might be a spin top or some volume now closing. Okay, so here's the close with a little bit of volume, opened red. Okay, so this thing could just come into right there where my cursor is, about 50% of that volume, and catch a wick and then flip green again and then start to break up. Would we buy this candle, or what do you guys think we should do? Okay, you see what I said? It came into 50% and flipping green. Buy, you guys say? Okay. I'll just wait right here. And guys, I might be looking I might be looking for a buy. You guys are telling me. Okay. Trevor, buy it now. I'm still waiting. I'm looking in the book. If they'll pull a few more offers, and maybe then I'll take it. You guys are going to wait for a pullback then buy? Okay. Okay, I'm going to go in. I'll test it out. I'm going to go in for a buy. Okay, next thing I'm doing now is I'm in the buy. Okay, so there's nothing I can do. Now it's just where do I place my stop loss? You see? Maybe I got sucked in right there. Now my stop loss, maybe I'm going to put it like right below this green box. I'm going to give it room to breathe. You know, if it comes back down into here, maybe respecting this trend line, respecting in here if it needs to. So I'm giving it some room to breathe. Obviously I want it to fill that previous wick, but I'm not going to give it that much of a stop loss just for that much reward. That makes no sense. Okay, so I need to go at least to the next red box above. Okay, for at least a little bit more than a 1-to-1 on the money. But look over here. Okay, so let's just see some structure where it could possibly maybe get rejected if it doesn't reach this entire big red box up here. Maybe like looking over here, this area where there was no, I don't want the purple line. I want this one. Okay, so I'm gonna watch at 2429.50 if it does get up there. Okay, so what just happened? I'm in a buy now. It did push out of there. Okay, but it's a lower high than that previous high, so it came up there. They rejected it, but as it came down, we picked up more bids. We picked up more volume on the buy side. Okay, so we're coming right back up to maybe the high of our candle. Maybe with more momentum, we're able to push out of here, and maybe we'll see if we can tap into this previous high. And then also if volume can close above here. Okay, I like, it's a nice candle, but we need the volume to close above here to start building. And that's this yellow line right here in Bookmap. So every time we're coming up here, we're getting rejected. If we can start to build a little bit of the depth of market above this yellow line, then maybe we're going to start to pull some of these offers, and then we can move right through here in the current order book. Okay, so this candle is going to close in 60 seconds. Let's see how and where it will close. tapping into this 200 EMA, and the 200 EMA and the 90 EMA are converging together. If we get this 9 EMA to cross above this 200 at some point, maybe we'll have a golden crossover and it might continue to push to the upside. But there could be a rejection to come down into here. That's why I'm giving it a little bit of room to breathe. That's my stop loss. So we'll see what happens in here. And we're getting a new 15-minute candle at 12:15 in 10 seconds. So we can also look at the 15-minute candle in a moment to see where and how it will close. So we did come up there, we got rejected. It might close it below here again. Next 15-minute candle probably open red and push down. Okay, so here's the new 15-minute candle, new 5-minute candle opening. Did I get that closing volume I wanted to close above that red line? I didn't. Did I get that volume to close above this yellow line in Bookmap? I didn't. You think it's going to sell off? I was talking about maybe that double top up here, the push down, but I kind of want to go with you guys, what you guys think. A lot of you guys said to buy. That's okay. We'll see how it plays out. If it pulls back and picks up more buyers, we might get that push up. Let's see. This is the elevator coming down at 12:15. Will it come down to and respect this 9 EMA? Will it come down and respect structure right here where there was a body, a wick, like right in here? So we got to get these buyers to continue to ask to trade up here. Like similar like this move where it came down and then they were asking to trade back up here. Now it's coming down, but if they don't start to ask to trade up here, the sellers can easily take out good levels of support down here and start to continue to drop this down. Okay, so we got some good asking. See that? See how it came down, back down into here, but they're asking to trade up here. That's good for buy side. Okay, see how it came down red at 12:15. That could have been that momentum shift. Started at 12:15, but now they're asking to trade back up here. So again, we still need volume to close above this level. And Dow Jones, Juanito, we'll get to it. We'll get to Dow in 1 second. 1 second. Let's just look at the 15-minute candles. Okay, so the 15s, we had a nice bullish one at 11:45, 12. We continued to push, and then it rotated back down. This is the new 15-minute candle we're on, so maybe it will rotate back down. Still holding majority of 50% of that volume in that 15-minute bar. Okay, so those traders that were asking to trade up there when it came up, they kind of got engulfed by the sellers, and now the sellers are continuing to push it down. So this will probably break its own low and come down and take out maybe this low down here. We'll see where my cursor is. See guys, why my bias was more to be cautious up here on the double top at the 200 EMA and maybe to possibly sell the market down. That was my bias. That's why I want to show you guys. I want to show you guys where we need to use caution. Okay? Let this be a lesson for all of us here. I'll take the loss for us, but let this be a lesson for everyone here. Okay, and understand why I said to show some caution above here, because guys, this is the second top of kind of a 50% move, and you're at that 200 EMA. Okay, I know a lot of you guys said option A, buy. Okay, and then that's my maximum loss on the trade. Okay, that's as much as I'm going to give it. Can gold get to 2450? Absolutely can get to 2450, but first we need volume to close above here, 2425. We got to get to 2430, then to 2440, then to 2450. But if you're looking for 2450, don't be looking at 5-minute candles. It's too far away. Start to look at your hourly. Look at your 4-hour candles, and then those will tell you if we're going to get to 2450. Don't be focusing on these lower time frame candles. You're too far away. We're at 2423 right now. Okay, now let's just walk through. What do a lot of people do when they're in drawdown right now? Do you guys add another buy? Are you guys like dead set on your buy position and you're going to add another buy? Are you guys very disciplined to take a loss? What do you guys do when you guys are in drawdown? Tell me, talk to me. What do you guys do? Do you guys hold and pray? What do you guys do? Add another buy, Johnny? Tell me, guys. If you guys think so, I want to know how you guys trade. You guys continue to add to a losing position. Why? Why do you guys do that? No, holding and praying is not a strategy. Okay, it's not a strategy in the markets. I don't know who taught you that strategy, but it's not a good strategy. Holding and praying is not how we trade. If you add to a losing position, does it work out for you guys? Does it work out, or does it end up hurting you? We got to know how to do this, guys. Okay, so that's why we gotta walk through this stuff together. Okay, because I see a lot of crazy stuff what you guys are doing when you guys are trading. Okay, so it came down where? Came down to our green box. It came down to our yellow line. That's our daily point of interest. That's why my stop loss is below the green box. Okay, that's why I gave it that much room to breathe. But if it came down to the green, that's it. Then my trade would have been done, because I don't want it to come down red and come all the way down here. So I'm in drawdown on this trade. I'm still live. It came down here. But do I want to add a position right now, where if I add another buy, it could come up a little bit, but then make a lower high and then drop back down? So for me, I'll add another buy, but I'll add another buy if I get that original close above there. That might be where I add another buy. I don't want to add a buy down here, because that big red candle that just came down was pretty heavy. So if I'm buying into supply again, and then what they'll do is maybe they reject it and push it down, and then I'll be at two trades at losses. Okay, and that will compound the problem. So this is a way how to mitigate your risk. You know, like, unless you're dead set on this move is going to go bullish and you feel 100% confident adding another buy, but don't just add another buy because you're just trying to get yourself out of that original drawdown. Okay, that's not good to do. Yeah, you can minimize loss by closing half. Okay, and while we're in this trade, I think I'm going to do a top-down analysis on US30. See what's going on there. Okay, let's just watch where this candle will close. Okay, so number one, go through the method. open close of that red candle, half of it is right around there. Are we going to close back up green near the halfway point of that previous red candle? Are we going to close kind of above it and build off of it and maybe come back up here? Or are we just, is this a retracement candle? It's a nice green candle coming up, but is it just going to retrace up to 50% and then they're going to push it right back down? Okay, so I'm still in the buy. I'm in drawdown. I have my stop loss set below this green box. We're coming right back up. In order to add another position, I'm going to add, if we can start to get the move developed through there. If we get some volume closing above here. You feel like it's a pullback to fly, Geraldo? I hope so too. I'm with you on this. We'll see what happens. But still, when I look at it, we're still in the consolidated zone. So, you know, they could just play the games with us. They could just come up, go back down, come up, go back down. But that was a good recovery, okay, for the buyers. That was an excellent recovery right at that yellow line, our daily point of interest, the 2422. Okay, so that was that yellow line when we did our top-down analysis. It is a daily point of interest. So the 5-minute candle bounced nicely. It bounced a couple times off of it. It bounced at 1150, bounced at 1155, and we bounced off of it at 1220 again. Now, can they build some momentum off of it and continue to come up and maybe close it near here? Or see that red candle that's still pushing down? It came up to about 50% halfway, and then the next candle again is red coming right back down. So you see that could have trapped buyers. You know, when I asked you guys, do you guys add a buy position, and most of you guys said I add, that could be your position that you added, and now you see how the market is coming back down bearish. So you're already trapped in a buy up there, and you add another buy. Now if the market really wants to squeeze you, they could come down here and take out this low and drop it down here, and then you're going to be in 2 trades that are negative. Okay, so you have to be cautious with adding positions. Okay, but that's a nice recovery. Okay, so you see how it came down red again, caught a nice wick. Okay, so there is now I can start to see that the depth to market is strong and still holding for gold for the buyers. So all we got to do is kind of get that momentum to close above here, and then maybe that breakout, if there is a candle, I might add a buy up there, add another position, and then take advantage if it can fly up there with 2 buys. But while I'm in drawdown, I kind of want to limit my drawdown to just 1 trade, as opposed to adding and adding, because if they really wanted to take this move down here, then it sucks, then it hurts, then you're in 2 big losses. Okay, so now that was where I originally entered, right there, where you guys said, Ron, let's go in. So I went in, we went in together, and now you can see that the candle is coming right back up almost to the entry point. So, you know, just talking psychology, I was in the trade, it came down to drawdown, now I'm right back to break even. Okay, so some traders close the position here, believe it or not, they close it. I'm not going to close it. I'm actually going to wait to see where this candle will close. Now we gathered liquidity, we came back up, so we're right back up at this yellow line, this critical point. You see right there, 1130, trapped buyers. Again up there around just before 12:15, trapped buyers. That was me, trapped buyer. That's me in that green bubble. Ron is inside there. Okay, so you see how the market now is coming back up to recover me. Now, will it recover me, and will we pull some offers here so that maybe new buyers will come in? Maybe I'll add another position, maybe you guys will add a position, and maybe we can cut through all of these offers and start to go back up into profit. So now we're right back into a couple pips of profit. That's not why I'm taking this trade, for a couple pips. We're taking this thing for the bigger move, but we have 90 seconds to go, and where are we coming up to? 12:30. Okay, so look at what they did here. 12:15, they brought it all the way down. 12:20, 12:25, kind of a recovery. If we can close it above here, maybe 12:30 might give us a little bit of momentum to the upside to continue to drive bullish. So this looks to me like maybe a possible inverted head and shoulder pattern. Left shoulder, inverted head at 11:30, and then this is like our right shoulder building back up, and then it has a high probability that maybe we're going to continue to break up to the upside. Well, let's see if we get that closing volume. That's more important than anything. More important is we get a nice closing volume above. See all these wicks? 1, 2, 3, 4, 5, 6, 7. Like there's 7, 8 wicks in this area, like right around here. Can we get a physical green body close above here? Okay, so this is a strong push. For you guys that added down here, congratulations. It kind of worked out for you guys. But I don't like to add in losing positions until I have additional confirmation, because you don't want to compound a problem. Okay, when you're already in drawdown, you're already at a loss. It is a problem. So if you keep compounding that problem and you don't have the right bias, you're gonna mess things up for yourself. Okay, so now if I'm gonna add now I see the candle closed above. Will it pull back into 50% of that body? Okay, so you see there, open, close. Will it pull back in? Should we go into a second buy, guys? What do you guys think? Or should we just play out the original buy we have? That's up to you guys. Okay, yeah, Carlos, you got burnt many times adding more. Yeah, everyone has. Okay, when you add and you add and you add at losing positions, sometimes the market keeps going against you, and then you've lost not only yesterday's gains, you've lost maybe a week worth of gains. Maybe you over leveraged. Okay, so number one, what do we have to do? We got to break above this wick. Okay, we got to create a new higher high in the market. This is the time we would want to do it. With nice bullish close, we have a nice 1230 candle. This should be enough to possibly break that wick right there. Okay, if we look at the 30 minutes, let's look at the 30-minute candles. This is what we got developing on the 30 minutes. Okay, we got this big bullish candle, another bullish one, a big pullback right there at 1130, caught that nice wick. Again, we opened red, we came down into our green box. So I'm going to stretch that green box. It's still holding. That's where my stop loss is below. Remember, it came down there almost, but stopped at that yellow line. Now we're got a nice 30-minute candle that did break. See how it broke? Now maybe we can push through here now. So let's see if we get that 30-minute momentum to fill up these other 30-minute candles to the left of us. Let's see on the 5 minutes. Okay, so you see right there, we tapped into the wick. Let's see now if we can start to fill a little bit through here. There's that big transaction above the yellow line. So you see now how this area, 2430, has turned into a temporary depth of market on the buy side. You see there's 15 bids, 18 bids, 20 bids, 23 bids. So if it pulls back, if we get like a red candle coming down, then maybe we'll pick up these orders and continue to drive. But maybe we don't need these. Why? Because the depth of market is already building above us. Maybe all we got to do is just continue to pull out some offers out of here, and maybe we can continue to drive up to our destination. One official, I agree with you. We can't control drawdown, but we can trust the strategy and setup. Yeah, so pick a particular setup that you are confident in trading, and just learn risk management and be confident with taking that trade, and just learning more and more from it. When you lose from a good trade, like when I have a double bottom setup and kind of maybe I buy the second bottom, I know that sometimes it's got a good probability of always working out, but sometimes it doesn't. The times when it doesn't work out, those are the times that I study the move to see what happened. Why did it not go like I wanted it to? This is a trade that I always take, and it's pretty accurate all the time I take it. And for some days when it doesn't work out, I need to learn from it. I got to figure out what happened. Okay, so you see right there how we kind of pulled back where the seller's trying to sell it into 2430. See how the depth of market is still holding. okay? And they're asking to trade up here. So we just got to continue asking. But while we're asking to trade up here, if we can close it above the previous high, that would strengthen the depth of market even more going into our next candle, okay? So if they can ask to trade it near the close, see how it came up there and now it got rejected. It's an inverted hammer candle, which is still bullish, but not as bullish as either a bullish engulfing candle or as a hammer candle closing near the high. Still a little bit, but we still got pushed down on this. Okay, but let's see where and how it closes. The last 30 seconds dictate everything. So we got 20 more seconds. See now how they're asking back up here. Let's see if we can actually get it to close near the high, and maybe we might continue building. I'm already looking for maybe a fair value gap pullback on these bars. Okay, so look at it. Nice close, almost right into the high, closing above the previous red line. Okay, so we closed above structure. We've got an ignited green bar open, short wick. Let's see if this is our opportunity. We have a nice strong 30-minute candle as well. We saw. Can it? No, it didn't break there. So you see how our wicks now, see how it's just a little lower high from the previous wick. It came down, picked up a bid and tried again, and then got rejected. So it's kind of like a double top within a single candle, and now the sellers may bring it back down. But then look over here. If you look at these EMAs, look now the 9, how close it is to the 200. Okay, so this is how long it takes for these EMAs. That's why indicators are lagging behind with price action. Price action is like a leading indicator. But if we do come back down red, maybe we tap into this area right here and pick up those buyers and then continue to go back up. Okay, where do we have some gaps in the market? Maybe right around here. I'm going to place a green box right in here. So if it trades back in here, can we pick up these buyers and hold this depth of market right here? So I'm just going to get rid of this consolidated box so everything doesn't confuse you. Okay, the reason why Ron put a green box right here was I looked at around 50% of that volume, kind of in there, 50% of that volume. If it does pull back in here, there's a lot of structure here. I've got a trend line, I've got the 9 EMA. I want to see if it will hold support in this green box, pick up all those bids and continue driving up. Now you see how the structure, we finally got that impulse push above this yellow line and then the pull back. Now we just got to see this depth of market, how it's building below us. Okay, and then when you see this zone, this green box that I have, if you bring it to the left of the chart, you can see how over here it was resistance, 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 and resistance. Then you see the big red bar, how it closed below and pushed down. Now we've got some volume closing above. So all I did was just extend the box across and made it green. So now if it does come down right into here, I expect to see maybe some wicks in here to reverse this move to come back up. Okay. So we went through this trade together where we originally took it. We went into drawdown together, but we had the stop loss placed below structure. Okay, so that's another thing. I place my stop loss below structure. I don't just go with a number. I know some of you guys just put 20 pip stop loss. Some of you guys 30 pip stop loss without even looking at structure. I look at structure. Okay, and then the size of the structure determines my lot size. If it's, let's just see how big this stop loss was. Okay, from where the trade was taken, right here, down to there. So it's risking 40 pips. Okay, so 40 pips. That's why I'm looking for the bigger reward. Sometimes I would have pipped and dipped out of here and grab these pips, but not with a 40 pip stop loss. That's not good risk management. So I'm trying to get this trade to come up to the big red box all the way up there, risking 40 to maybe possibly make 40 or 50 pips on this. But as it starts to move up 20 or 30, if it does, I'm going to take my stop loss and slowly reduce my risk. But another thing, if I had like a really tight stop loss in here, I would have been stopped out on that candle and possibly missed out on being in a profitable trade. Okay, so it's just, I know some of you guys say, oh, we're on 30, 40 pips, that's a huge stop loss. Well, it is huge if you're using a big lot size. If you reduce your lot size, a 40 pip stop loss is not that big. So it all depends on what lot size you're using. If you're not over leveraged, you should be okay. Okay, and then sometimes we might consolidate above a structure. Remember down here where we were consolidating and then kind of broke out? Maybe it may consolidate or flag like right here now above the zone. It might need to trade sideways to accumulate and gather some liquidity, like right up here. You know, if it goes green, comes back down red, maybe green, red, green, and then maybe break out of here, it might have to have a little consolidation flag above our zone that we just developed right here. See right here on Bookmap, if I show you right here, this is where now we are consolidating right here. And then this is for all of the EMA traders. This is the 209 meeting. This is now where we could possibly have a golden crossover. See now the 9 EMA, the green line, how close it is to that purple 200 EMA. They're basically touching right now. Now will the 9 cross over the 200 and give us a buy signal? Because that's what's considered to be a buy signal. If the 9 can cross above the 200, it's considered a buy signal. Maybe we can add another position on the buy side if we do get our indicators giving us that confirmation. Tibor, is Bookmap free? No, it is free if you download it and you practice with Bitcoin. It is free. But if you do use all the other securities, you have to subscribe to this Rhythmic Data. All of these depth of market providers, you got to subscribe to Rhythmic. Some charge you, some don't. But guys, look at that nice little pickup down there. It came down. Our buyers again are asking to trade above here. Perfect. So it did come down, came down. We got a nice bullish candle. Can it start to break above here? Here we go. Okay, so it's a nice little impulse push, but more importantly, 2.5 minutes to go. Let's get this volume close above this current level right here. Okay, so you see how it's still flagging, holding. Now we've maybe got the 9 EMA crossing above the 200 with us. Should be in about maybe pushing to 20 pips of profit now. Up to here. Yeah, 22, 23 up there. Okay, 20, give or take 2-3 pips away for your spreads. Okay, so there was a sharp rejection. It impulsively broke above there and then got rejected back down. Okay, so there is a lot of resistance at this point. Okay, Juan Official, you moved your stop loss to break even. That's perfect. I like that. You know, like I like that. Okay, don't get me, I love that. But some traders say, Ron, you went to break even too early, you know, but I respect that. Okay, so why would we not want to do that? If we're up 20 pips, we don't need to risk 40 pips on this trade anymore. You can do this. You can reduce it halfway, maybe up to that red line. Now you've just reduced your stop from 40, your stop loss, to now you've reduced it to only losing 20. Okay, so you've reduced it in half. That's one way how you can reduce your risk. We've got a trader now who's gone to a complete break even. Okay, yes, the trade might come down and tap you out at break even. That's a possibility. That's something that you got to learn on. Like, you got to learn how to handle your psychology with that. But we all got to work on this, guys. Okay, everybody is different, but you got to have some sort of strategy on a daily basis that you can consistently stick to, so that you can start to master it and be comfortable with what you're doing. If you want to continue to leave it open, then leave it open if that's your style. That's up to you. I'm not going to force you guys to do anything, but I'll give you guys options, and then you guys decide what's the best option for yourself. Okay, so we pushed, 10 more seconds to go, 12:45 now. We're coming in 12:45, a new 15-minute candle. It might change the momentum of these 5 minutes. Did we get that closure above there? No, we didn't. So it closed right back in the box. Next candle opens red, ignited, continuing maybe to push down on this new now 15-minute bar. If we can still get respect in here at this green box, at the 9 and the 200, maybe if it pulls back, makes a higher low, we might get that continuation up to the red line. And where did I got that red line from? Over here, where there was previous structure right here at 7:30 in the morning this morning. It came down, went back up with a wick. Came down, went back up, closed below, and then you see how it's kind of body to body in this general area. If we can push up there, and then our big resistance is that big red box, and that's kind of maybe where we take some profit out of there if it gets up there. Yeah, guys, sorry, I was going to get to Dow Jones here, but kind of we got stuck on this gold trade here. Okay, so we got against us a big ignited red bearish candle coming down. It's the new 15-minute candle. Okay, so this is another thing. What I do is sometimes when I know I'm in a trade and I'm scalping the markets and I'm approaching a new 15-minute candle, a new 30-minute candle, a new hourly candle, sometimes I tend to close trades, take partial profits out, because this has happened to me a million times. I can't count how many times this has happened to me, where I've been in profitable trades, and then come the next 15-minute candle, next 30-minute candle, next hourly candle, it's a momentum switch, and then the market switches on me completely. It happens. You guys will probably get used to it as well, the more exposed you guys are in these markets. But sometimes you got to have a plan, knowing that that could happen, and then maybe start to close out some profitable trades. And then you see it's coming right back down to our green box right here. Jeremy, how much has Bookmap helped your trading? It's not just Bookmap, okay? Let's talk about depth of market, okay? Depth of market, because it's not just Bookmap. Bookmap is not the only depth of market provider. There's Quant Tower, there's Ninja Trader, there's all kinds of different depth of markets. But to answer your question, a depth of market, yes, can help you. It's helped me, and it's helped with trading, because you see, if we're just trading the candlesticks, this is what we see. When we're seeing more depth of market, we can actually see exactly what is happening inside the candle, where most of the transactions are occurring.
Recording stopped.
We can see maybe orders being spoofed out of the market. We can see hidden orders coming in the market. Like, there's a lot of things that we can see that we cannot see with a traditional candlestick chart. So to answer your question, a depth of market will help you. A level 2, level 3 analysis will help you. The more you can see, the better it is. Okay, the less we can see, then we don't have too much information. Okay, but Bookmap is great, guys. We do have the link in our description if you want to click on it, and after the call you can download it for free. You can You can watch how Bitcoin moves in the depth of market. You can see the current order book for Bitcoin. You can use this indicator right here, this cumulative volume delta indicator. You can see everything with Bitcoin and practice with it. But in my opinion, this does help you out as a trader. Okay, so we opened this 15-minute candle, really bearish. It was bearish ignited. There wasn't even any push to the upside by the buyers. So it came red all the way into our green box. It just tapped our previous trend line that we had. It broke below the 200 and the 9 EMA, but let's see where the volume will close. If it will still close above here, will our next candle open green and come back up? So we got a little bit of a nice rejection coming down into there, but still a lot of red volume. Might close in near the low, and we might continue maybe pushing down into here. Okay, so that's a break-even trade. You know, some of you guys that said when you were up there, you took your stop loss and you went to a break-even. Now, unfortunately, the market can come down and hit you at a break-even. So this is why, guys, you know, when I say when I go up 15, 20 pips, I dip out of the market. It's sometimes for this exact fact, how sometimes the market can come right back down to where you entered and you just said goodbye to 25, 20, 15, 10 pips. Okay, and as a scalper, pips add up. You know, I'm not just looking to take one trade per day. I might scalp 5, 10 times a day. So if I'm taking 10, 15, 20, 25 pips out of the market, they add up. If you multiply that by 5 or 10 trades, that could be someone's daily goal for about 100 pips a day or more. Okay, so I'm just trying to walk you guys through how I trade to see, yeah, I want to hold for the bigger move, but sometimes the market doesn't allow it. And then you see, now it can come back right back down into drawdown, where we just went through the entire emotional roller coaster of taking a trade, going into drawdown, coming back up to break even, going up to about 25 pips in profit, and then coming right back down to a break even and possible drawdown again. So did you guys see, like, we walked through this trade together on this call, and you can see how emotions change all the time, where we're mad, we're in drawdown, we're excited again, we're euphoric up here when we're back in profit, and now we're sad again and we're pissed off down here again. That's what trading will do to you. So you got to learn how to control all of these emotions. So how do I control them is I have shorter targets. I'm not looking for 100 pip moves. I'm not looking for always the big 50 pip moves, like up to there. That would have been a 50 pip grab. I'm more happy with 20, 25 pips. It keeps me more consistent, keeps me compounding my account. And that's a scalper's mentality. I'm a scalper. Yes, I would love to take trades and hold them for bigger moves, but sometimes the market, when you're scalping the markets, does not allow for that. Okay, so I just want to show you guys this. I'll continue trading the way how I trade with you guys, but I want to walk you guys through a couple trades together and ask you guys questions. How do you guys handle this? Now, for most of you guys that didn't take out any profit up there, including myself, now it's coming right back down in here and drawdown. Now what do you guys do? What do you guys do here? Are you guys getting mad? Are you guys adding another buy position? What do you guys do? Walk me through it, guys. Let me know how you guys trade. I know how I trade. How do you guys trade? Now it's time to pray. Juanito, you should never be praying in the markets. Okay, if you're praying, then you know that you're doing something wrong. We pray for other things. We don't pray for trades. Shouldn't be praying. Okay, but you guys, okay, some of you guys are saying adding more positions. Okay, that's fine. If that's part of your strategy, add more positions. But are you guys okay with if those multiple positions go into multiple drawdown, and then you're risking maybe more than today's risk? You're giving back a couple days worth of profit. Maybe you're in a prop firm and you're over leveraging and you're hitting that 5% daily drawdown and you're blowing up your accounts. So these are things you got to understand. If you're ever adding positions, you gotta incorporate that with your daily risk. That's why you gotta break trades down. You don't go all in on one trade. Like this trade, I didn't go all in and just go in with a big lot size and risk my entire maybe 1% on this trade. I only risk 0.2% of my entire 1% for the day. Okay, so I broke my day down into 5 trades, and that's just one of 5 trades. If I lose this trade, like if this trade comes all the way down and taps my stop loss, I still have 0.8% to go before I even lose my 1% of my day. And then that's when my day is completely done. So then my next couple trades are to get back my 0.2% that I lost to the market and try to end that day profitable. Okay, so make sure you guys are learning these things. I see a lot of you guys are just adding positions and you're risking 1% on this trade. Your second position you're adding another 1%, then you're adding a third 1%, and you're adding too many percents and it's hurting you. Okay, now guys, look how the market went against us now. Now look, that big red candle closed below our green box. I have to go through what I do here. I always do this. I don't care if I'm in the trade or I'm not in the trade. I got to make it red, because now the sellers have control of this current leg of the market. The buyers are trying to buy back into here, but they're buying now into an area of supply. If they cannot close it back above here, these sellers could push these buyers down and start to come back down into here. Okay, so we have about 5 more minutes. Let me just do a quick little top-down analysis on US30, because I gotta get the kids and we gotta go to the movies here soon. But I want to give you guys a top-down analysis on US30 if you guys are trading this afternoon. This is quickly on US30 on the daily. I'm gonna do this one faster, okay? So I'm not gonna take too much time on this. Over here was our previous all-time high area on US30, that 40,000. So if I bring this zone across, you can see that we are currently trading above this zone. So I'm just going to make this green. Okay, so let's figure out what's going on up here on the Dow. Okay, so we got this big bullish candle on Wednesday, Thursday, continue to make an all-time high, pull back. Friday, continue to come back up here, and then now let's follow the volume today on US30. So we closed here on Friday. They kind of gapped it up. You can see they opened it all the way up here, and we took out a new all-time high. 40,000 and 080, let's say, is our new all-time high for US30 up here. So purple line, all-time high, daily high. It came up there. They rejected it, pushed all the way back down to 39,900. That is our low of the day, purple line. So we're still inside this green box. We're still holding higher lows. We're still above 50% of this big bullish candle that came out of here. So where are some key points of interest, like yellow lines we can place maybe somewhere? I'm going to place it right here, where the top of this green box is. Again, let me just get rid of these boxes. Maybe this is what's... so I'm going to place a yellow line where we closed on Friday. I'm going to ignore the gaps in the market, okay, because that's manipulation when they gap these things up and down. But I'm going to stay focused on closing volume right here where they closed on Friday. So can we get, right now we're below the yellow line, can we get back above that yellow line and maybe we can push back up to test up to 40,023, where they gapped up and opened the market up there? Maybe we can drive up to our all-time high. Or will this red volume continue pushing down today, and then where could we come down to? Open close of that green volume, half of it is right there. There's where half of the volume is. So I'm going to place one more yellow line right here at the halfway point. Now I kind of got my scalp zones for today, for this afternoon. Now what I do is overall look at the daily candle. They gapped it up. Bullish all-time high. They took it out. It came all the way right back down to here, and there was some buyers bidding it right back up. We still have this bearish volume still that could absorb all the buyers and continue pushing down, or the buyers have a tough job to do because they're buying against all these sellers right now. So let's go to the 1 hour, and then again, like we did with gold, check the 1 hour moves. We can see exactly when did we hit the all-time high, when did we hit our daily low today. So now walk through this. So where was London? Right in here. 3 a.m., 4 a.m., 5 a.m., 6 a.m., 7 a.m. Here's kind of COMEX market open. 8, Wall Street. Right here, 9. 9 was the big drop. It was big red candle. It came down, produced our low of the day at 39,900. We cut a wick and came all the way back up. 10 o'clock, we continued with that bullish momentum, and 11 when we started the call, we just tapped into our all-time high. Okay, and then since then it's been coming down red, closing below that yellow line. Look at the retest of the yellow line, and now we're pushing down. So you see right there, we've got 2 tweezer bottom lows on the hourly candles. If I draw a white line now for hourly, right here, hourly. Okay, white line for hourly. That's how I distinguish everything. Now, the hourly volume could just be consolidating between this yellow and this white line. If we continue breaking below our hourly support, we could drop down to our next daily point of interest, and then maybe our low of the day, the purple line right there. If we continue to break above, bullish above here, I look for volume to close above 39,985 above the yellow line, and then maybe we can fill the imbalance back up to 40,023. Okay, so right now we're very consolidated in between the yellow and the white line. Let's go to the 5 minutes and check it out. Here are our 5-minute candles. Okay, so there was the big drop during Wall Street, the pickup coming right back down. So it is trading back down. Now, where could it trade into? Look at this big green candle. Okay, where's half of it? Open, close. Half of it is right there. You see right at that wick. So what I do is I use that wick and the yellow line to produce my green box for US30. You guys see what I just did there? Okay, I use my yellow line as point of reference on the daily. 50% right there. Open, close. Half of it is there, but I kind of aligned it with that wick, bringing it across. So right now, if it comes all the way down and trades into here, that might be an opportunity to take the buy out of there and back up. Okay, so I might have to wait patiently for the market to come down and tap into the green box. If not, I can see right now where it's consolidating. Remember what I said, the yellow and the white line? This is my consolidated area. Okay, this is the consolidation area right here. So now I'm not in a trade, I'm neutral on US30. What could happen? Could it just trade inside here? Could it break above, close above, and then we start to push up there? That's a possibility this afternoon. Also, could it continue maybe to close below there, retest this, and drop into the green box? That's a possibility, and maybe come back up. Or will it just trade inside the box and just continue consolidating in the box? Okay, so that's for US30. Again, if you want to complement your chart with those indicators, there's that we're below the 9 EMA. The 200 is up there. RSI, we're below the 50 RSI, so the strength is weak right now. Okay, there's the 50 point. We're below it. We're approaching maybe being oversold, so maybe we got to let the RSI cool off into our green box, and that's where the big buyers are waiting in here. Okay, so that's US30, guys. I'll give you guys this chart. I'll give you guys this chart 1 second in Zoom, and then we'll go back to gold. Gold, I can see, is coming right back up. Okay, so we're multitasking here. That's why I have it on Bookmap also. Okay, so let's go back. Wow. Okay, so guys, I gave you guys in Zoom, I gave you guys the US30 charts. Okay, so we'll keep US30 right here. Now, look what happened. Okay, so red, candle open green. Did we flip the red box green while I was doing US30? And you see how it retested it? Okay, So you see how it retested it? It retested it. Green coming all the way back up now. Now if we can, we're going to maybe produce a new high, come up there. If we get the volume close above, now I want to make that my red green. I guarantee you this candle might be 50%. Right there will be the zone if it can go close up here in the next 1 minute. I can see where maybe 50% is right here. Okay, now maybe reduce your risk now with the next leg up. See this, where it was maybe red right there, maybe turning green now. Okay, so you can see how I'm already kind of adjusting for maybe the 50% pullback in that green box. There we go, guys. So this should be maybe running, what, 30 pips? 25. If it can get up to that red line, we're looking at about maybe 35, 36, maybe 40 up there. Good push on gold. So congratulations to you guys with the buyers mindset, guys. Congrats. I'm going to go to a break even now on this trade because I'm going to be wrapping up this call in a couple minutes. But guys, I'm at a break even now on gold. Okay, so no matter what happens, I'm at a break even. I cannot lose anything in this trade. Okay, so there's our close. Okay, so if we ever do come back down red, 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 see how Ron already put the green box? Why? Look it, open, close, half of it somewhere right around there. But I use the wick, and where it was resistance right there. Maybe I'll bring it right back down to the red line right there. So I want to have now, if it does pull back, the buyers will maintain green bids and develop the depth of market now as it's pulling back. Okay, guys. But how was everyone's call today? Like, it was more of a light session today. The markets are not as crazy right now. We had all European banks closed, Canadian banks closed today. We were going to take the day off today. It's also Victoria Day here in Canada. We're going to have fireworks display later this afternoon and later this evening. So, but I said, let's jump in the markets. Let's learn together. Let's see how the markets are. Trevor, you're out of gold. Enough roller coasters for you? Yeah, no. Trading is roller coasters. Just be prepared. See how we got the wick. See how it came down red, red, red right into the green box, and we're wicking out of here. Okay, so we picked up all of those bids, and now all we got to do is continue to get the buyers to ask to trade up here. But you can see now there's a little bit of heat coming in the market now. Okay, in Bookmap, you see the heat up here. So there's probably going to be a lot of offers up here. But if these buyers continue to ask and trade up here, we could potentially break through here and cut through some more resistance. But not bad, guys. Can we get? Can you guys hit the likes on YouTube? Trevor Doobie time, yes sir. Enjoy that. Can we get some likes on YouTube, guys? Thank you, guys. We appreciate it. Almost 300 viewers today. It was awesome. Okay, guys, but I gotta go get the kids ready. We're gonna go to the movies today. I think there's a movie called If with this big purple I don't know what it is. My kids are telling me let's go watch it. I think Adam Sandler is the voice in it. It's called If. Let me see what it's called. Did anybody watch it? Anybody even know what I'm talking about? Yeah, it's called If. I don't know. But all I'm worried about is this nice bullish candle printing right here. Okay. Beautiful retest in our green box. New high. Okay. We're driving through here. Maybe we're squeezing some of the shorts. There we go. Sorry guys, Bookmap just turned off. Guys, but that's 30 pips right now, okay, to 30 pips. I'm going to secure a little bit up there. I'm going to secure 80% of my position up there at 30 pips. If it taps into that red line, that was that 30, what did we measure up there, 37? Okay, but I'm going to slowly start to scale out of my position, guys. But overall, we took that trade. We ran into a little bit of drawdown, but we strategically placed our stop loss below this zone. We came right back into profit again and then pulled back. We got a nice bullish candle print out of there, retest, and here we go. So that's a beautiful move for maybe 35, 37. And then if it can go all the way to this previous big red box for 50 pips, remember, we're counter trading. We're still in buys, but we're counter trading this big selling momentum. Okay, so just be careful, guys. Thank you guys all for joining. I appreciate all of you guys. Hopefully you guys learned something off of this trade. Congratulations to you guys that grabbed a few pips off of this. We worked together on this one, so this is like a team effort trade. We worked our way together on this one. So that's how I kind of want to do these calls together for a couple times until we all understand everyone how we can trade together. But that's fantastic, guys. Nice little extra pips for today. Make sure, guys, join Shahab in London later, and I'll be back tomorrow, guys, this time 11 a.m. Eastern. So make sure to subscribe, and we'll see you guys on YouTube tomorrow. Enjoy the rest of your day. Happy Victoria Day to all the Canadians out there. And Val, enjoy the Vancouver Edmonton Game 7 tonight. I hope, I love both teams. May the best team win. As long as the Canadian team can advance, and it's not the Toronto Maple Leafs, I'm very, very happy. Okay, guys. We got another, like right here, real quick. There's a quick little fair value gap. You see how we opened ignited in that wick? If you want to draw like a really, really quick zone to see if it will still hold, right there to there. I know it's a lot of these green boxes, but I'm just trying to illustrate a point here. See that wick right there? And we still are holding that green volume. We opened ignited. Now it's cutting into here. So if we can still come into here and catch a wick and drive back out of here, then we might complete the entire 50 pip move up here. But I'm not getting greedy for an extra 5-10 pips. I secured my trade up here, guys, because sometimes when I do get greedy, you guys have seen last week and some of the calls where I tried to get that extra 5 pips, then it's a huge elevator coming down. But if you're still holding this, you see how we've respected this green box. This one down here is still resting. This one is still resting. These bring into the future, bring them into the future. This one flipped red to green, still holding. Bring it. You see how that wick came into there and right back out. So now we're going to test this green box, see if we can continue to hold in here. Okay, guys. But thank you, guys. Fantastic session. I hope to see a lot of likes on this call when I'm done the call. So everyone on YouTube, if you guys can, make sure to hit the likes before you leave on YouTube. Everyone, guys, this is the free Telegram channel for you guys. It's pinned at the top of the YouTube. Please join this. Everything we do at SST is inside here. Here's a new promotion, guys, an inflation discount to help you guys out in tough times over here. We know that everything is getting inflated, but the prices of SST are going down. So you get a 3-month membership with everything we do here. It includes all live sessions, SST Scalper Pro signals, the 52-week education and content, live weekly webinars, private sniper Discord community, access to our SST strategies, all for $112. Use this code. It's limited to how many people can get into this. And these are all of our links, guys. YouTube, Stock Sniper Trading, our website. And if you want the expert advisor, right here, MQL5, you can download a free demo and test it out, guys. Okay. And like I say, knowledge is power. Continue learning, guys. Continue read every single day. Join SST daily. This is our weekly schedule. And we can all learn and learn every day and be profitable every day. So thank you guys so much. We went over Forex Factory and all the earnings today. Make sure, keep in mind, remember what day was Nvidia's earnings? Who knows? Who knows what day is Nvidia's earnings? Is it pre-market, after hours, and what day? It's very important. Okay, so you see how we're still respecting the green box that Ron just placed there? That was that fair value gap. That's, guys, very simple stuff. You know, my daughter's right over here. She's gonna almost be 8 years old. I can get her over here and she can run this tutorial for us where the fair value gaps are. So keep the, yep, 420 Wednesday after hours. Johnny, my man, you got it. Okay, so Nvidia's earnings are Wednesday after hours at 4:20. Make sure, guys, you guys are aware of that. Okay. I got to free up some space on my computer here, but look, it continues to run. So, and then, guys, sorry, I didn't talk about this on the call, but maybe a trailing stop loss. Okay, so maybe you can use blocks as trailing stops. So like maybe if you want to put your trailing stop loss below that wick right there that was tested, all of this is secured money. Maybe if you want to bring your trailing stop loss right there, you see, guys, how it traded red right into like 50% of our green fair value gap, picked up that wick and continued to drive, guys. Try and locate these fair value gaps. Okay, if you're having difficulty, rewatch this session, because I showed you guys a daily fair value gap, I showed you guys an hourly fair value gap, and I'm showed you guys maybe about 3 5-minute fair value gaps. Okay, and it can help you hold the trend and look for additional trades. But if it tops right up to that red box, that's an entire 50 pip move. That's an excellent trade, guys. So everyone that said bias was to buy, you guys are absolutely correct. So congratulations to everyone. Okay, but thanks, guys. Have a good day, and we'll see you guys tomorrow. Thank you, guys. Peace out.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit StockSniperTrading.com.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.